What's up everyone, in this video I will update you guys with the new standard deviation range of Tesla. On the left we have the probability from my video a month ago. On the right we have the probabilities at the present moment. The new range for Tesla at the moment is between $300 a share and $220 a share. Tesla is a perfect case study to show how probabilities are dynamic. I highly recommend you go back and watch the first video. Obviously the probability range have changed and is now more skewed towards the upside. So why am I showing this comparison? For the first time since the beginning of this YouTube channel, I received a hate comment for being half wrong on my Tesla video from a month ago. I want to start by apologizing to absolutely nobody. Okay, jokes aside, I do want to apologize on the way I express myself, being new to making YouTube videos. That's one of the reasons why I started this channel, to improve my communication skills. So I hope this video will help clarify and correct my past mistakes. In my past video, I explained that we were at the second standard deviation, which was correct at that time. There was a 95% probability that we topped and only a 5% probability that we could go higher. The market then proceeded to push back up for another 10% gain than I originally anticipated. These types of moves rarely happen and are signs of extreme conditions in the market. Now Tesla is right back down to where I called the top last month. That was the point of the video. The purpose of these videos is to explain how to trade using probabilities in your favor so you can become a consistent trader. This is a perfect example of how powerful using probability can be to increase your win rate by only selecting A+ setups. And Tesla at these levels a month ago was not a good risk-adjusted return setup based on probabilities. If you had bought when I was looking for a deeper pullback, you would be close to break even right now. You would have made a small 10% gain with only a 5% chance of being right. That's the key. I play big range with probabilities blowing in my favors, like this entire leg that we caught on this channel. 5% chance of being right on a small bounce is not a good reason for me to take a trade. So technically the probabilities from last month were half right, telling me to no longer touch Tesla on the long side. That's why I was playing Tesla for the entire leg up and then stopped once the probabilities were no longer in my favor, saving me from losing money in sideways consolidation, which is what's going on right now with Tesla. It's basically just going sideways in a big range. That's the beauty of using probabilities. It tells you based on a non-biased opinion if the risk reward is worth playing the setup. At the moment, Tesla is down about 14% from its local top. Most of this happened in one day after earning. It rebounded a little bit today with the broad market. So why did it correct? Earnings were not bad. Profit margin were slightly down. The reason why is the market is forward looking. That's why Tesla was going up for the past months. Everyone on Wall Street knew they would beat. Earnings were expected and came in line. And because Tesla did not guide higher for next quarter, nothing left to push the stock up. This is a recurring pattern in the markets. That's why you should never chase. This phenomena is also known as buy the rumor, sell the news. Looking at trend following, basically just a fancy way of saying use moving averages. Tesla is still in a bullish trend. Tesla is at the moment bouncing at the means, which is the green line right here, which is the middle of the standard deviation daily range. Because the probabilities are now skewed to the upside, you can clearly see that Tesla now has room to go back to the second standard deviation, which is the purple line, which is now way higher than a month ago, which is in the ballpark of $320 a share. On the downside, the second standard deviation is now in the ballpark of $220, which is the purple line. That's the range I'm expecting for the next month. Looking at the option chain seems to agree with me for Tesla. So as you can see, 3 months out, the range is between $312 and $225, which is basically the exact same range. Obviously, those standard deviation range are dynamic, so they will change on a weekly basis. They can even change on a daily basis. Personally, I would love a deeper pullback, which will probably end up being a beautiful buying opportunity. So what's next for Tesla? I personally will be looking to add to my position if Tesla goes to the first standard deviation, which is the gray line right here, or the second standard deviation, which is the purple line. I will be combining this with the market internals using the 10-day breadth of XLY, the Consumer Discretionary ETF. Tesla and Amazon have the highest weighting in this ETF and usually follow a positive correlation. Looking at the 10-day breadth, we are not yet at an extreme, but we're getting close to it. I will be waiting for a complete cycle back down to the green line right here, which will be a buying opportunity in my humble opinion. I have found great accuracy combining probabilities with market internals and seasonality data. Okay, that's it. Hope this helped. Have a good one and stay blessed.